A lot of people are hurting on Twitter. There's a lot of complaining. That is when you want to be buying. Hey, it's Travis. I think a lot of people think about the sum of alpha prices wrong. In today's video, I want to go over my thoughts about how sum of alpha prices should be used, how it should be thought of using an analogy from Austrian economics. So before I get into the analogy here, the sum of alpha prices is this graph here. We can see there was some spikes and then a pretty big valley here and then another ascent and now a very slow descent. And a lot of people are becoming very disheartened during this slow descent. So if you don't know what the sum of alpha prices is, this is where we take all the subnets alpha price and we add them all together and we come up with a sum. And you can see that it's been up and down and up and down and then slowly up and slowly down here. Now the way the Bittensor protocol is built right now, the sum of alpha prices cannot go below 1. So yeah, we're very close to the bottom here, and what that means is there's only around 10% or 11% more that the sum of alpha prices can fall before the protocol kicks in, and it changes the way emissions work such that the sum of alpha prices, the floor for that is 1. So as of this video, in the last 3 months, there's just been a gradual descent of alpha. And what this means is that there's a lot of people on Twitter and on Discord asking the devs to fix it. What that also means is it's time to buy when there's a lot of blood in the markets. This video is sponsored by TAO Stats. It's the leading Bittensor explorer. You can buy, sell, and stake Bittensor TAO on TAO Stats. Personally, I do a lot of staking myself through TAO Stats, and I think it's the easiest place to stake TAO and alpha. There is a link to TAO Stats in the description. I have a separate video on how to stake alpha through TAO Stats. The link to that video is in the description as well. So I'm not going to go too in depth as to how Austrian economics works, but I think it's very apt for explaining how dynamic TAO works because it's an a school of thought that is focused around how completely free markets may work. So this is going to be a pretty rudimentary example. You can do your own research to dive more deeply into this if you like. So we're just going to have like a chart of an economy here. So it's just going to have a boom here and then a bust and then a boom and then a bust and another boom and a bust, etc. Generally going upwards. Now, I'm not going to explain the axis here because this is just a general boom bust cycle that we see all the time. You know, every 4, 8 years, whatever, there's like a boom bust cycle. And we've seen that for like over 100 years. So the question is, why does this happen? So the Austrian school's way of explaining this is the Federal Reserve's manipulation of interest rates, specifically setting rates artificially high or low. So let's go down here and see what that looks like. So we've got our interest rates over time here. So what'll happen is the Fed will set interest rates at some rate that they have decided. So say 5%, then they'll lower it and it'll go down to 2%. Then maybe they'll lower it again to 0.5%. And then maybe they'll leave it there for a bit, and then all of a sudden it jumps back up to 3%. So these changes in interest rate in the Austrian School of Economics are used to explain why there's boom and bust cycles. Because at some points in time, they might be too artificially high or too artificially low. When interest rates are too low, everything looks like a really good investment, and so money is just flying out. That creates a boom. When interest rates are too artificially high, the math on those investments that were made when the interest rates were lower may no longer check out at that point. So then investors may pull money, that ultimately creating a bust. So this interest rate is not set by markets, it's made by the central planners at the Fed. So when they artificially set rates lower than what the market rate would have been, that is inevitably going to cause malinvestment. And then when the rates increase, those malinvestments will become evident. So what I'm really trying to get across here is that the market rate for interest rates in this blue line here, we just don't know what that is in a traditional market because interest rates are centrally planned right now by Federal Reserve type banks. So this magical market interest rate line here that we don't know what it is in traditional markets. I have a feeling that that line exists and we'll get closer and closer to it over time with the sum of alpha prices here. So I think in retrospect, we could have said that the line was probably somewhere around here in the past. When it's below the line, it's worth investing into alpha. When it's above, it's time to take a look at maybe profiting. Now, of course, when we didn't have this full graph, at least up until today, and we were just back here, we had no idea. But now that we have a bit more data, it feels like the line is going to look something like this, you know, somewhere below 1.5, maybe closer to 1.2 or 3, something like that in the long run. You could probably actually come up with a nice slope here for what it looks like over time. So right now we're at 1.11, which is lower than this last valley, which is nice because each of these valleys has been lower than the last. So that's looking good. So my criteria for really starting to enter into alpha was going to be when the sum of alpha prices is lower than the last dip, which it is now. So I'm taking a closer look at which subnets I think are favorites and have the highest possible upside. And I'm not sure if we'll get into this 2.5 range anymore. Maybe back to 1.5 would be reasonable. I think that over time, we're going to get closer and closer to this invisible line. And the way that I think of that line is the market rate for interest rates. I think that given enough time, this invisible line will be very important. Somebody will have coined a name for it in the same way that there's like a Bitcoin rainbow chart here, where we're kind of extrapolating where Bitcoin could go in the future. Now, I've mentioned this before on my Twitter. You can follow me on X if you're not already, that I'm really looking at getting more into alpha now that the sum of alpha prices is low. A lot of people are hurting on Twitter. There's a lot of complaining, devs fix it, all that stuff. That is when you want to be buying, is when there's a lot of pain in the markets.